Greetings, friends. It's me, Oleh Ivchenko, head of Pareto Company. This is a new episode of Pareto Point, our weekly review of events in the field of transfer pricing, controlled foreign companies, and taxes. Today, among the main news of the week, new tax control measures in the field of trade and services in Ukraine, cooperation between the state tax service and transfer pricing experts from Western Europe, the latest changes in the OECD Model Tax Convention. I will tell you about all of this in more detail. Let's get started. The State Tax Service of Ukraine is launching a new digital tool called Tax Control, which allows for prompt reporting of violations in the field of trade and services. The key idea of the service is to strengthen tax discipline where there is a shadow economy, which affects both the quality of business financial indicators and the accuracy of calculations. In the field of transfer pricing, reports can be submitted around the clock on the State Tax Service web portal. Failure to issue a fiscal receipt, operating without registration, violations involving excisable goods, and unregistered employees. Everything is submitted online with photos and a detailed description. Personal data is protected, and the service operates throughout Ukraine, except for temporarily occupied territories. For businesses, this is a signal. The state is improving digital oversight, thank you, and is paying more attention to the transparency of operations. Ukraine is strengthening transfer pricing control as part of an international program. Tax Inspectors Without Borders. During the trainings, experts from the United Kingdom, France, and Sweden helped the Ukrainian State Tax Service analyze typical profit-shifting schemes, royalties, interest, and intra-group services. Special attention was given to situations where the main value of the business is created by Ukrainian specialists, but the profit is concentrated abroad. International experts analyzed our cases and agreed. In a number of transactions, there are risks of profit understatement in Ukraine. This has already led to independent adjustments by taxpayers and the initiation of documentary audits with the involvement of TIWB. Such a format of cooperation strengthens Ukraine's position in international groups and helps ensure a fair distribution of profits in places where real economic value is created. The Organization for Economic Cooperation and Development, OECD, has updated its Model Tax Convention, the key document by which countries conclude their tax treaties. The main changes concern two topics that have raised the most questions in recent years. First, cross-border remote work. Clear criteria have been provided for when an employee's work from home in another country can be considered as the company's activity on the territory of that state. In other words, the tax authorities now more clearly define in which cases a home office abroad creates obligations to the tax authorities of another country. Second, taxation of income from the extraction of natural resources. The model includes a new provision that strengthens the right of a country to tax income where extraction actually takes place. For countries where extraction is an important part of the economy, clearer rules and a fairer distribution of tax revenues are established. These were the key events of this week. We continue to keep an eye on the world of transfer pricing and CFCs, analyze trends, and stay focused on what matters most. I am Oleh Ivchenko, and the Pareto team thanks you for your attention. Subscribe, leave your comments, and share your own news. With your help, we become even more useful. See you in the next episode of Pareto Point.